All right, welcome back to Robinhood Stock Market Watch List Facebook group. My name's Carlos, and today is Easter, March 31st, Sunday, 2024. And now within our stock market meeting that we do every weekend, it's kind of like our crystal ball, as I've always kind of mentioned, that it helps us kind of look into the future a little bit to kind of see what's going to happen before it happens. Now, we always look at the economic reports first, because economic reports always have the biggest impact on the entire stock market system. Then we'll look at the financial earnings reports, because those also have a big impact on certain stocks, but also segments of the stock market. Then we'll also take a look at the some options activity, because part of our trading and investing is to always follow the money. And so it's always important to know where the money is going. And a lot of times we can get that information from stock options. And so we're going to go over a lot of highly valuable information. So make sure you guys stick around. This is typically about an hour long, but it's going to be very, very valuable going into this stock market week. So going into our economic reports, we always like to use a website and an application called investing.com. And so from here, we'll want to go to the economic calendar. And then from the economic calendar, it's going to automatically provide a lot of things on there, but we want to filter that out, because there's only a few things we need to take a look at. And so you'll need to click on the filters button, or if you're on the app, it's a picture of like a little funnel. So when you do that, you want to clear all, so get rid of everything. There's only two things we need selected, and that is the United States. So put a check mark under there, and under importance, you'll see a 1 star, 2 stars, and a 3 stars. I'm going to put a check mark under 3 stars, because we're telling the system to pull everything that'll have the biggest impact on the United States stock market. So when we click apply, now it will automatically adjust, but we want to click this week, so that way we see everything that'll have the biggest impact on the entire stock market for this week. And you can see here we have a very, very busy week of a lot of economic reports. And normally they're set up for Tuesday, Wednesday, and Thursdays, but we have every day this week: Monday, Tuesday, Wednesday, Thursday, and Friday. Now, normally there are economic reports that are weekly, but also monthly, but occasionally there'll be some quarterly ones as well as yearly ones. And so the more rare these are, the more severe that they'll have on the stock market. So looking into Monday, now when we're looking at the times, it's important to know whether it's going to be released before the stock market opens or after the stock market opens. That way we know when to expect this volatility. And so when we're looking at on the website, it's always going to default to the Eastern time zone. But if you're looking at on the app, it's going to be default to your time zone. So make sure you are aware of or when it's going to be released. And so in this case, these economic reports for Monday are scheduled to be released 15 minutes after the stock market opens, and then 2 of them are 30 minutes after the stock market opens. So the first one, which is the S&P Global United States Manufacturing PMI for the month of March, because that's a monthly report. These are all monthly reports. These are going to have a very good amount of volatility. And so, but it's important to try to figure out, is it going to provide bearish volatility or is it going to provide bullish volatility? And how we can determine that is to compare the forecast with the previous. So we have to ask ourselves, is the forecast greater than the previous, or is it less than the previous? And if you're not sure what the report is, or maybe how it'll affect the stock market, be sure to click on it, and a little paragraph will kind of appear here. It lets you know what it is, and below that will let you know how it'll affect the stock market. And most of these, the forecast needs to be greater than the previous for it to be bullish. If it's going to be less than the previous, it's going to be bearish. There's only two reports that need to be down, and that would be the unemployment report and the crude oil inventory levels. Where the lower those are, it's better for the economy. If they're higher, then that's bad for the economy. So really, those are the only two economic reports that need to kind of be the opposite. Now, going back to Monday, April 1st, so the first economic report forecast is 52.8. The previous report was 52.2. So the forecast is greater than the previous, so it's basically saying expect bullish characteristics. Going to the second one, the ISM manufacturing PMI report for the month of March. The forecast is 48.5, where the previous was 47.8. So another greater than the previous, letting us know expect more bullish characteristics. Now, the third one for Monday is 53.3, where the previous was 52.5. So another greater than the previous, which is good. Because sometimes we may have some that are greater than, one may be less than, and so then we can expect maybe mixed signals. Now, may not know which way maybe it may go, but they're all consistently saying that they're going to be greater than the previous. So expect a bullish day pretty much for Monday, and that's how we can determine whether that day is going to be bullish or bearish. Now, there could be things that could easily intercept that day with some kind of news, unexpected news. I mean, it can happen all the time, but we always want to focus on the majority of the time, and this is the majority of the time because we don't always get a unexpected news event that happens to where it would provide a massive amount of volatility with the market. I mean, it takes a strong amount of news to do that. Now, Tuesday, April 2nd, we have the JOLTS job openings report for the month of February. And this report is scheduled to be released 30 minutes after the stock market opens. So the forecast is saying that it is predicting that the jobs opening report will be 8.79 million. The previous report was 8.863 million, which is less than the previous. And so this is just letting us know, be prepared for bearish characteristics. So hopefully Monday the stock market will just surge up, and then Tuesday will be kind of like a time for it to cool down a little bit. Stock market will kind of come down a little bit, and when the stocks do that, it just provides buying opportunities. We buy the fear, we sell the greed, and that's one of the things that us pro traders will say as a reminder to don't always be greedy. When it's time to sell it, secure your gains, and repeat the process. So Wednesday, April 3rd, we have several economic reports. So this may be the most volatile day of the week, which would be perfect for those that want to straddle, because straddling, it doesn't matter if the stock goes up or down. As long as it picks a direction, it can be extremely profitable. But we have one economic report that is scheduled to be released before the stock market opens, and that's the ADP non-farm employment change for the month of March. So we got another monthly economic report that will provide a very good amount of volatility. Now, this report is forecast to be 149,000, where the previous report was 140,000. So again, this is greater than the previous, so expect bullish characteristics. But when the stock market opens, 15 minutes after it opens, we have the S&P Global Services PMI report for the month of March. And this report is forecasted to be 51.7, which is less than the previous. So we are having some mixed signals here, because sometimes the market always reacts prematurely or early, And so we could see where, we could just see a massive swings. The stock market, surging up, then plunging down after opening, and so. But just be ready for this this type of characteristic for Wednesday morning. Because then going into 30 minutes after the stock market opens, we have the ISM non-manufacturing PMI report for the month of March. This report is forecast to be 52.5, where the previous report was 52.6. Though we don't have anything for the non-manufacturing prices yet, though the forecast may most likely appear there tomorrow morning, Monday morning during pre-market. So it's important that we revisit this on a daily basis as well as every weekend. That way, because things change. They may add more reports in there through time. They'll add forecasts in there, but right now we're missing two of them. We're also missing the crude oil inventory levels, which this is an easy one to predict, because crude oil inventory levels is 1 week they're up, 1 week are down, because people tend to fill up their vehicles about every couple weeks. Most people are paid every 2 weeks, and they'll just go to their favorite gas station. They'll fill up there, whether it be Costco or their grocery store or wherever, so we'll see the crude oil inventories levels consumed a lot in 1 week, and then the next week they're not, because people are still using their fuel that they used or they bought the week before. And so last week the crude oil inventories were up. They were up over 3 million barrels. That means in this last week they're filling up. So that means that the crude oil inventory levels will be down. And so if they're down again, that's bullish. The crude oil inventory levels and the unemployment numbers need to be down for it to be bullish. And so crude oil inventory levels will be bullish this week, but again, we still have a missing one here, and then we have a couple of them here which are slightly bearish. And so Wednesday to me just looks very, very volatile, with a mixture of both bearish and bullish characteristics. Then we have at right around noon Eastern time, or 9 o'clock a.m. Pacific time, we have the Federal Jerome Powell that is going to speak. And so that's going to provide some volatility in both directions. So just be prepared for Wednesday to be extremely volatile in all directions. Then we have Thursday, April 4th, we have our unemployment report, which is scheduled to be released 1 hour before the stock market opens. Now, unemployment report looks like it's expected to go up, which is bearish. If unemployment and crude oil inventory levels go up, that doesn't help the economy. We need people buying gas, and because that means that they're driving, and that helps the economy because they're buying other things. Unemployment, when people have jobs, they're making money. That helps the economy because they're paying taxes and they're buying things. And so if people are not working, they're not doing that. And so this is a bearish economic report. And so just be prepared that Thursday could be slightly bearish. Only one economic report, but it is a weekly report, so it's a mild characteristic. It's nothing major because it's not a monthly or quarterly or a yearly. It's a weekly report that happens every week, just like the crude oil inventory levels. So these will provide a minor effect, but it is still an effect on the entire stock market. Then we have Friday, April 5th. We have 3 economic reports that are scheduled to be released 1 hour before the stock market opens. So that's great because that'll help provide volatility upon opening. So these three reports are the average hourly earnings month over month for the month of March. Then we have the non-farm payrolls for the month of March and the entire unemployment rate for the month of March. Now, the average hourly earnings report is expected to be right around 0.3%, where previous was 0.1%. So that this is looking bullish, which is positive. That's good. Non-farm payrolls looks like we are down a little bit at 205,000, where previous was 275,000. So that would be bearish, because again, if you're not sure what these are, please be sure to click on them. A new tab will appear and it'll tell you what it is and how it'll affect the stock market. For example, the non-farm payrolls measures a change in the number of people employed during the previous month, excluding the farm industry. Job creation is the foremost indicator of a consumer spending, which accounts for the majority of the economic activity. A higher than expected reading should be taken as a positive or the bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so it just tells you in plain English a little bit more about what it is and what to expect. Now, the unemployment rate for the month of March was 3.9%, where the previous was also the same. So Friday looks mixed. We have both bearish and bullish, results, and then we have one with which is the same. So just be prepared and expect, it's important to know what's going to happen before it happens. And like I said, this is a very, very easy one to add as part of your due diligence on a weekly and a daily basis. And so the next thing that's important as part of our due diligence in our meeting is to then look into the earnings release for this coming week. And so I always save all my posts under our featured and announcements area in our group. And so if you go to our group, whether it's on the website or the app, just go to the very top and you'll see several tabs between our discussion, featured, events and media files and other things. So featured, which are all my saved posts, will be right here. And so the scheduled earnings release for this week, and keep in mind that we are now in a new earnings season. So we are now in a second quarter. So the earnings season is now based on the first quarter, January, February, March. Or before it was for the fourth quarter. So we're in a whole new year, new everything, and so new earnings season. So but we have a decent amount of some stocks that are scheduled to release their earnings coming this week, as more and more are scheduling in. And so the top 10 earnings for this week is going to be Paychex, Dave & Buster's. We have the PVH Corporation, NanoX Imaging, BlackBerry, Cano, Sigma, Lithium, Equity Brands, Lamb Weston, and CalMaine Foods. And so, but some of these I've never even heard of. These are some of them are new, and anytime when we see new ones that we've never really analyzed, that means that there's something going on with these companies that investors are keeping a close watch on, and so that's why we want to put these on our watch list. And so, though, anytime when we're also going into a new quarter, that's usually when a lot of like EV companies will kind of let us know how well they did or how bad they did, because they release their sales and delivery reports, which is completely different from the financial earnings, because the financial earnings just talks about the money aspect of it. The sales and delivery reports are how many vehicles that they built, how many did they get delivered to customers, maybe how many customers ordered. I mean, it's that kind of stuff. And with that kind of stuff, we can kind of have an idea of the financial aspect of it before that stuff is released. And so this is a reminder to let us know that Tesla first quarter deliveries, are could potentially be a nightmare quarter for Tesla. Because Tesla was lowering prices to attract buyers, but also several other things. But it's plus gas prices were pretty low. And anytime gas prices are low, people for some reasons tend to focus on gas combustion vehicles. But once they start going up like they are now, people will then revert back to buying hybrids and plug-in hybrids and all-electric vehicles. And gas prices and oil prices just went up a lot lately. I'm talking about 15%. And so, but this, again, bad news can be good news because it can provide great buying opportunities. So if Tesla dips down, again, this is just going to be a great buying opportunity because Tesla has so much more potential to go here in the near and the late future. And so just be prepared that Tesla is going to be very, very volatile going into this week because it just depends on when Elon Musk is going to release these sales and delivery reports. It could be, I don't think it's going to be today, but it's not going to be today because typically it would either be the 1st, 2nd, 3rd, 4th, or 5th of the next month. And so just be prepared. This is going to happen. And we might as well start buying puts immediately because it's going to happen. We just don't know when. It's just a matter of when it's going to happen, not a matter of if. And so just be prepared that Tesla is going to be extremely volatile sometime this week. And so, but yes, I'm always posting things that we can always look at. They're very, very highly valuable. But Paychex, or PAYX for the ticker, is confirmed to release their earnings on Tuesday morning before the stock market opens. And so investors are bearish going into the company's earnings release, with a 52% expecting an earnings beat. And option traders are pricing in right between a 5 and a 6% price movement in either direction. And so, but it's interesting that, when you see things where we expect it to beat, but investors are bearish, but with a 52% expecting earnings beat, it's pretty much 50-50. This thing can go either way. Next one is this PVH, which I don't know anything about, never heard of them, but they're expected to release their earnings Monday after the stock market opens. They are expected to beat their estimates. However, investors are also bullish going into the company's earnings release with almost a 61% expecting an earnings beat. Option traders are pricing in right around a 7.5% price movement in either direction, or previously in the past it's moved right around 9 to 10% in recent quarters. So we'll definitely need to put that one on our watch list and do a little bit more due diligence on it. And then we have Dave & Buster's with the ticker PLAY, P-L-A-Y, is confirmed to release their earnings on Tuesday after the stock market closes. They are expected to beat their estimates. Let's see, investors are bullish going into the company's earnings release, but with almost a 47% expecting an earnings beat. That is very, very low. Now, normally when we look into these earnings release, they normally have a right around a 65% expecting an earnings beat, and so that's usually average. Anything less than that is, I would expect that to be below average. Any more than that would be considered above average. However, option traders are pricing in right around a 12 and a 13% price movement in either direction, where normally it's moved right around 8.5. So for some reason, option traders are expecting more volatility with Dave & Buster's than ever before. Now the next one is this Nano X imaging. Again, this is the first time I've ever heard of them, so we'll have to do a little bit more due diligence on them. But their ticker is NNOX. They're confirmed to release their earnings report on Monday morning before the stock market opens. And which is, we'll have to do a little bit more, like I said, more research on this. However, option traders are pricing in a right around a 32% price movement in either direction. That is huge, where they've normally averaged right around a 6.5% price movement in either direction. But for some reason, investors are expecting a lot of volatility. So let's take a look at our charts and graphs on NNOX to see kind of what's going on here. And so I'm going to switch over to our Webull graph here. Let me change this up here a little bit here. NNOX. For some reason, I'm thinking this is a penny stock. But so we're right around just under $10. So let's take a look here. So it looks like right around February, it was right around $13. So it's right about $10 now. And so 30%. So $10, 30%, that's $3 that's either going to go up or down. So $3, $10, that means it could go right back to its high levels where it was before, which it can easily do, or it can go down to about $7, which would be right around here. And so where, not that long ago, in February, it was right around $5, $6.50, $5.50 to about $6.50 look like where it's been fluctuating. But for some reason, since mid-February, it spiked up, and now it's doing a certain algorithm. And where normally with this kind of algorithm, it kind of funnels it at the end, where now it almost has to like pick a direction. It's got to go up or it's going to go down. But investors are betting that this stock is going to be very volatile, tomorrow morning. And so, but that gives us the opportunity to do a little bit more research on this, and to, if we're gonna do anything, it's definitely not going to be under options. I don't even, well, it does have options here, but this is more or less going to be a pre-market type of thing, or we can wait until after the stock market opens to see what it's doing. And so, but from what it looks like now, we do see where it's kind of dipped, and now it looks like it may be trying to recover. We can kind of see that within both the MACD and the moving averages. It hasn't quite yet crossed over all three moving average lines, but it is kind of letting us know, hey, be ready, because it could easily do that, or again it could drop, but it just depends. We just have to do a little bit more research on this company to figure out exactly what they're doing, what caused this, and why investors think it's going to go up or down 30%. So this is a very, very big one here. And so, and again, that is Nano X imaging. So that's a little bit of homework for us there. And then, so next one is BlackBerry. BlackBerry is expected to beat their estimates, and they are confirmed to release their earnings on Wednesday after the stock market closes on April 3rd. The investors are bullish going into the company's earnings release, with a 60% expecting an earnings beat. Option traders are pricing in right around a 14 to almost a 15% price movement in either direction, where normally it's moved right around 7 to about 7.5% in either direction. Now, on March 12th, there was a notable amount of buying contracts, almost 7,000 contracts of a $4 call that expires this Friday, April 5th. So there's definitely some very interesting activity with this one. Let's take a look at our charts on this one to kind of see where BlackBerry is and kind of where they're headed. Now, just for some extra info, now during the GameStop manipulation days, what was that, 2021, so GameStop was a stock that was picked for to save the company, but also to teach hedge fund companies a lesson, because they were building a reputation for ruining companies that we absolutely love and grew up to, and profiting from it. And so if you haven't watched the movie Dumb Money yet on Netflix, I highly recommend that you do. That way you can kind of relive the what happened during that time. Now, anytime we have a stock or a cryptocurrency that gets highly manipulated and pumped and dumped and whatnot, there's always a copycat. So there's always another crypto or a stock, the wannabe that wants to be just like that manipulated stock. And so besides GameStop, AMC was the second manipulated stock. If you remember, if you were around that time, you would remember. And then all of a sudden there was more in the pipeline, and BlackBerry was kind of getting ready to be the third manipulated stock. But all of a sudden, the government and these broker platforms, they started to intercept the volatility and prevented people from buying and or selling, and it was just a big chaos. And again, if you watch the movie Dumb Money, you'll see a lot of that stuff take place. But it was, like I said, it was just one of those stocks that was getting ready, and then it was intercepted. But it's also a company that was one of the leading industries on cell phones. Before the Apple iPhone, this was a very smart and intelligent phone that had a keyboard on it, had a little scroller, thing on there. It was very nice. It was very convenient, and it was kind of our smartphone at the time. And so, but then the iPhone came out and just really dominated smartphones. And so BlackBerry over time slowly became a dying company. So they started focusing more on cybersecurity. And so, I mean, man, do we need more and more cybersecurity these days? As I just got a news article about how AT&T, basically all of their their customer database has now been compromised and is now on the dark web. So if you're an AT&T customer, or ever have been, your information is on the dark web. Most likely, our information is already on there, since Equifax many years ago got compromised and many other things. But cybersecurity is still a very, very important factor, and that's kind of what they specialize in over the years. Though they're still considered a penny stock, and as we can see with their graphs and charts, they're pretty low right now, very, very low. And so this is a right around $2.76, and so and we're kind of on this dip where, especially with the MACD, looks like it's getting ready to come up. It's telling us, hey, be ready, just be prepared. And the moving averages, it's not quite there yet, but it's looking pretty good. And so and that's where I think we're seeing where option traders are pricing in that 14.5% price movement in either direction, because it wants to come up. And so 60% expecting an earnings beat. So far, that is the the largest percentage we've seen out of all the other earnings reports. So going to the next one, we have the what is that? Canoe. Ticker is GOEV. Is confirmed the release of their earnings on Monday after the stock market closes. Let's see here. So we do have some minor information, but this is a company that that we haven't ever seen before. So investors are bullish going into the company's earnings release, with they're right around a 52% expecting an earnings beat. So we'll kind of have to see what that's going to look like. We'll have to do a little bit more research on Canoe to see kind of more about their the company and everything. However, on Monday, March 18th, there was a notable amount of buying contracts of 11,000 contracts of $2.50. But it's a put that expires on Friday, May 17th. So obviously, investors are bearish with this stock, even though they're saying they're bullish. Sometimes we want to put their money where their mouth is, and so their money is betting against it, where some investors are saying they're bullish. And that's one of how we can kind of decipher this a little bit. Now, another one that we haven't seen before is this Sigma Lithium. And so when I see that, and I'm not familiar with this company, but usually when I see that, I'm thinking of like the lithium, like maybe the battery materials for EVs. So we'll kind of have to do a little bit more research on that, because several years ago, when Joe Biden was really getting on the bandwagon for this whole EV thing, they decided and announced that they're going to invest into 20 different American mining companies around the country, because electric vehicles is the thing that the majority of the world is focusing on. And so we have China that has buying lithium mines all over the world, all over South America, all over Africa, all over Asia, Europe. They even had the audacity to knock on Mexico's door and say, hey, we want to buy your lithium mines. Mexico basically gave them the finger and said, no, all of our stuff belongs to us and is our national treasures. And so we will do what we want with our own stuff. And so and quickly we saw them kind of investing into their own stuff, and then our country decided that we're going to invest into 20 different mining companies around the country. And so this could easily be one of them, or maybe they're a battery manufacturer. There's just a lot of different companies that are involved, but they're all going to be invested in. And so it's definitely something we don't want to overlook, because this stuff is inevitable. And so Sigma Lithium, or SGLM, is confirmed the release of their earnings on Monday, though the time they put a glitch in the time, so most likely it's probably before the stock market opens. Investors are bearish going to the company's earnings release, with a 44.5% expecting an earnings beat. So that's not good. That's definitely bearish looking at that. Though, however, option traders are pricing in right around a 14% price movement in either direction, or normally it's moved right around 3%. So option traders are expecting a lot of volatility with this stock. Now, on Friday, February 23rd, which was quite a while ago, there was a notable amount of 3,000 contracts of the $9 put that expires on Friday, April 19th. So, but like I said, I'm not seeing a lot of people investing in mining companies yet, but they're out there. But it's going to happen. A lot of them may be kind of beat up a little bit, but people are going to buy into it, because these stocks are eventually they're going to do really, really well. And so and I do have a list of the 20 stocks or the mining companies. Let me see if I can find that really quick, and that way I can show you here. Let's see here. yeah, it was. Otherwise, it could be difficult to find it elsewhere. But this is a very good picture because it also shows kind of a map of where these mines are around the country. I'm still looking through it. I apologize for the wait. Okay, I found it here. Okay, I put that picture under our learning stocks chat room, and so this is it right here. So this is the 20 or 19 mining companies in the United States, and so and where they're located, and so. And each mine kind of specializes in something different that these battery manufacturers will need to manufacture the batteries. That way they just bring all the materials together and manufacture them, and then they get installed in the EV cars. But this is a really neat, and this image I was able to retrieve from the United States Department of Energy. And so, but just know that this is the companies that that people are going to invest heavily into. Though I don't really see the list or the company of the financial earnings on there, but that's why I'm thinking this is probably more of a battery manufacturer, because I don't see Sigma on the list here. But yeah, but yeah, if you want that, make sure you check out our learning stock chat room where I just uploaded that for your reference. So next one is the Equity Brands is expected to beat their estimates. Their ticker is AYI. This is one we have. We regularly look at this one every quarter. Their earnings release is expected to be on Wednesday before the stock market opens on April 3rd. The investors are bullish going to the company's earnings release with an 82.6% expecting an earnings beat. That is huge. That is way above average, and it's almost certain that this stock is going to beat its earnings, almost no matter what. With that kind of high percentage, unless the stock price is already priced in. So that's why we got to check that out. Now, where are we at here? Let me see. So yeah, 82% expecting an earnings beat. And then we have, let's see. So we don't really have, okay, yeah, here we are. Option traders are pricing in right around a 4.5% expecting a price movement in either direction. So it's not going to be that volatile because normally it moves right around 6.5%, but 4.5% is still pretty decent, and we have plenty of time to be prepared. So let's figure out if AYI is priced in or not. So let's take a look at our graphs and charts on AYI. And we can see that it is already priced in. So I would anticipate that this stock will go down. A lot of people will ask, how come it's going down? It had great earnings, blah, blah, blah. Sometimes bad news is good news. Sometimes good news is bad news. And so in this case, 80%, they already know it's going to beat its earnings. And so it's going to go down. But again, that will just provide great buying opportunities because it'll go down. What was it? Was it 6-7%? Or are we at here? Let's see. 4.5%. So, oops. Not quite there yet. So 4.5%. So how we can figure that, we need to figure out what in the dollar amount is 4.5% based off of the current share price. So the current share price, which is $268.73. So times the 4.5%. So you do times 0.045. And that gives us $12. And so basically we would deduct $12 from the the $268.73 for the share price. That puts us to just under $257. $257. That's not much. That's right here. It'll dip down a little bit, but and it may do that for maybe the next week and then begin to recover up. But so far, this is definitely one of the ones we want to kind of wait and see what happens afterwards. Because definitely, I would say 80%, even though 80% they're going to beat their earnings, I still would say 80% most likely it's going to come down. So that's one way we can determine these kind of things. And so then we have the next earnings report for Cal-Maine Foods, which is their ticker is CALM, C-A-L-M. They're confirming the release of their earnings on Tuesday, April 2nd, after the stock market closes. Now, investors are bullish going to the company's earnings release with an 85.7% expecting an earnings beat. My goodness, that is extremely high, and again is also we'll have to look more into that to kind of see where their stock price is currently. Now, option traders are pricing in right around a 6.5% price movement in either direction, or normally it's moved right around 5.5%. But 85%, that is crazy. So let's take a look at its stock here as well. Here's CALM, and so what is this? Must be a newer IPO. Must be. They haven't been around very long. Looks like they just December 14th. So typically when it comes to IPOs, most expert and professional investors and traders usually like to wait after like 3 earning reports. So if this came out in December, we'll start seeing more heavy investors and traders will still start investing into this probably sometime during the fall or the winter season. And so, but we can kind of see where it's kind of been kind of going up and down. It's just kind of ranging kind of where it's been, is because investors are just waiting to see what they're doing. They need more time with this stock. Now, for the price wise, it could go up and it could go down. It's priced right in the middle where it can do either or. But if it's over 80% expecting an earnings beat, most likely it is probably going to go up, because there's plenty of room for it. We can see that we have these new higher highs and new higher lows, and so this is what investors, short-term and long-term investors, are looking for. And so and they're going to really pay close attention to these earnings reports to kind of see where the company's headed. And so far, it looks pretty good. And that's one of the reasons why we want to put this one on our watch list. So the next one is the Lamb Weston. I'm not familiar with this stock either. This looks like it's a new one. The ticker is LW, but they are expected to beat their estimates. They are expected to release their financial earnings on Thursday morning before the stock market opens on April 4th. Investors are bullish going into the company's earnings release with right under 43% expecting an earnings beat. Option traders are pricing in some volatility with this one, right around 7%, where normally it's moved right around 5%. Now on Tuesday, March 19th, there was a normal amount of buying contracts of a little over 2,000 contracts of the $75 puts, expiring on Friday, October 18th, later on this year, 2024. So, which is a long time from now, but it's definitely one we want to do a little bit more research on. Now, this is another one I'm not familiar with. This is a new one for us. Angiodynamics is scheduled to release their earnings on Thursday, April 4th. That's going to be early in the morning before the stock market opens. Now, investors are bullish going into the company's earnings release with an 87.5% expecting an earnings beat. Oh my gosh. I mean, out of all of these earnings, this holds the highest percentage of their earnings beats. So we'll have to do a little bit more research on that, take a look at that graph to see kind of where it's priced. Now, option traders are pricing in almost a 30% price movement in either direction, or in the past it's moved right around 14%. So we're also expecting more volatility with this one than ever before. So let's take a look at ANGO. ANGO. Let's see where they're at. All right, so taking a look at ANGO, they're priced pretty low, so they can easily beat their earnings and go up, and because it needs to. I mean, they're priced right around $5.87. So let's figure out what dollar amount would 30% would give us. Where would that put us on this stock? So again, to figure that out, we got to get our calculator out. And so we got to type in the $5 and a point, so 5.87, and we times that by 0.3, and then that gives us about $1.76. So we add that back into the share price, the 5.87, and that puts the share price at $7.63. That's right here, right there. And we can see that the highs, which was last December, was $8. So to go to $7.63, it can do that, and most likely it probably will do that. So, and the charts and the graphs are also saying they're being prepared. We have, the last week and a half, we've seen a lot of positive buying activity. We see that the price line has cut through all three major moving average lines, and the MACD is also saying, hey, it's happening. Be ready. Put this on our watch list because it's going to be on the news. Got to remember, one of our other sayings is buy on rumor, sell on news. If you're relying on buying on news, it's too late, because and that's why we see people leaving money on the table, is because they weren't planning their trades appropriately. And that's why we always want to plan our trades. That's why we have these meetings, is so we can plan our trades, so we can trade our plan. Because if we fail to plan, we are planning to fail, and that is not us. And so that's why we do these meetings. We do these research, and that way we can figure out what's going to happen before it happens. And that just gives us a huge advantage over everyone else. So the next earnings release looks like that is it. So when we get towards the end, we always want to make sure we're touching base with investings.com, top 5 things to watch in the markets in the week ahead, just to make sure we didn't miss anything, because we're very, very thorough when we do our weekend due diligence. Now, the United States employment data on Friday will be the main highlight of this week's economic calendar. Amid hopes of the economy is on course for a soft landing, the second quarter gets underway after a stellar performance for the stocks for the first quarter. The yen and the yang remain on intervention watch, while data out of the Eurozone and China will be closely watched. Here's what we need to know to start our week. Now, the first one is going to be the non-farm payroll reports, which is stuff that we've already kind of went through, but it does say that the Friday's jobs report will be in the spotlight amid the investors' confidence that the economy is set for a soft landing in which inflation moderates, but the economy avoids a severe downturn. The United States economy is expected to have added right around 205,000 jobs in March, slowing from the 275,000 jobs added in February. And that's where we talked about that this could potentially provide bearish characteristics because it is less than the previous. Now, hopes for a soft landing for the economy were boosted after the Fed at its March meeting stuck to its view of the 3 rate cuts this year, while upgrading its outlook for the economic growth. Ahead of the jobs data Investors will also get a chance to hear from the several Fed officials, including the Federal Jerome Powell on Wednesday, among several others, later on that day. Now, the second thing that we need to watch for is the second quarter kicks off with its financial earnings. Those are a lot of things that we just talked about. Well, the United States stock market has had a strong start to the year, boosted by optimism over artificial intelligence related stocks and expectations the Fed will begin to cut interest rates later this year. Where I think we've figured that they probably start right around May or June, somewhere around there. But to be determined. We still need to see these inflation numbers come down, which is just not happening. So there is still a good chance that we may never ever see the interest rates go down, and so there's just too many things that are keeping the inflation up. And with what happened with the whole Baltimore Bridge going down, that could can contribute to the inflation and because of the shortages, and that's why there's a lot of people that believe that was all intentional, and so but we won't go there. But like again, this is huge. So each of the three main United States indexes recorded solid quarterly gains, led by a climb of over 10% for the S&P 500 for its biggest first quarter gain since 2019. Whether that rally continues in the second quarter is largely down to the Fed. At the start of the year, markets had been expecting 6 rate cuts from the Fed. Now just 3 are priced in, and officials have not yet signaled that inflation has come down enough to justify a rate cut, because they're pretty much trying not to. They're keeping things where they're at. We can easily see that. We can feel that. We can continued strong momentum will also depend on corporate earnings, which get underway in earnest the second week in April. Now, number 3 is the intervention watch. And this is the monetary authorities in Japan and China are on high alert as their currency weakens past levels that they've been defending for months, largely thanks to the strong U.S. dollar. Now, with the yen faltering towards the 152 per dollar level and the yen struggling to break above the stronger side of the 7.2 per dollar, officials have stepped up efforts to bolster their currencies. Now, in Japan, that means verbal warnings, while in China it has been a state banks buying yen and selling dollars. Given how much the two big Asian currencies have fallen, there's a growing school of thought that Beijing could have grown more tolerant of a weak yen to maintain its competitive edge against the yen, but it's hard to say what's next. Now, number 4 is the Eurozone inflation. The Eurozone is to release flash inflation data for March on Wednesday that will be closely watched amid speculation that the European Central Bank is gearing up to cut rates in June. Now, which is good because Wednesday, which we determined is going to be a very volatile day, so having major European economic reports added on top of that will just basically add more fuel to the fire. So that's good. We want more volatility because I love to straddle because I don't care which way the market goes as long as it picks a direction. It can be it always gives us something to work with, because it doesn't matter if the stock goes up or down. It can be very, very profitable with certain rules and guidelines that are implemented. Now, if inflation surprises to the upside, rate cuts bets will be pushed out, just like what I was telling you. Speaking Saturday, the ECB Governing Council member Robert Holzman said that it could lower its key interest rate before the Fed, noting that the European economy was growing more slowly than the United States counterpart. Now, last but not least is the China data. Now, China's manufacturing activity expanded for the first time in the 6 months in March, according to the official data published on Sunday, offering relief to the policymakers even as a crisis in the property sector remains a drag on the economy and confidence. Expectations are for Monday's, I'm not sure what that is, but some kind of manufacturing PMI report to show a slight expansion, likely continuing its divergence with the official reading, overall offering a mixed outlook for the world's number 2 economy. Policymakers have wrestled with the persistent economic strugglishness since the abandonment of COVID curbs in the late 2022, amid a deepening housing crisis, mounting local government debts, and weakening global demand. So that is the top 5 things to watch for this week, according to theinvesting.com. Now, the next thing that's important that we look into is the options activity, because as I mentioned earlier in the meeting, it's always important to always follow the money, and it's important to know where the money is going. So let's take a look at our website that we like to look at for options activity is barchart.com. There's a section under the options for most active options. So when we're looking at this during the weekend, this is basically Friday close data, but it still gives us a lot of valuable information of what investors were preparing for going into the next trading week, or as well as the next trading day. So looking at this, and this is the most active stock options out of the entire system. Tesla's number 1. Tesla closed at $175.79 with a options volume of about 2.1 million, which is a lot. And out of this amount of volume, we have almost 60% call ratio and almost a 40% put ratio. So investors are more bullish going into Monday than they are bearish. Then Nvidia, which is second place with about 1.7 million in options volume, is about the same thing, about 60% call ratio over 40% puts. And then we have Apple at third place, though Apple has a little higher call ratio of about 64% over 36, or 64 over 36. So again, in looking at the top 3, top 5, they're all very bullish going into the next trading day. Now if they were not, it'd almost be 50-50. It would be 50% puts, 50% calls, because they're not sure what the next trading day is going to be like. They're straddling. They're betting both that the stock is going to go up and down, giving them something to work with. Because if the stock goes down, then their puts are going to go up. Then they can sell that, secure their gains, wait, and then right during the recovery part, and then there'll be a loss on the calls. Well, all of a sudden they'll start gaining their loss back, and they could potentially gain, because if Tesla was down, all of a sudden then in the middle of the day it goes up. That you can profit from both your calls and puts. And I always say, never have calls without puts, never have puts without calls, because if you think you have the stock market figured out, that is when the stock market has you figured out. And the only way to protect ourselves is with this particular insurance play called straddling. It's where we have both calls and puts, because it always gives us something to work with. And so then we have AMD, that's fourth place. AMD is right around $180. Almost over 800,000 in volume, but yeah, 60%, over 60% call ratio. We have Marathon Digital Holdings, which is related to the cryptocurrency industry, 71% call ratio. And then we have Amazon, that's almost 70% call ratio, very, very good. Now, it's important that we look at this stuff every single day. Now, when we go to this page, it will populate usually within 15 minutes after the stock market opens, and it updates its order every 15 minutes, but the prices update every second. So this is our radar. This is, even though it's like a screener, a scanner, this is our radar. That way we know what's happening to these stock options in these stocks. Even if you're not into stock options, that's fine. This is still very, very valuable information for those that are looking for stocks to day trade, swing trade, short-term or long-term investing, because it's part of the tools to always follow the money, to figure out where the money's going. But when we're looking at this website, we can also, on a daily basis, we can also tell what stocks are normally on here and what stocks are not normally on here. And when we see a stock that's not normally on here, we have to consider that as unusual activity, because they're not normally on here and all of a sudden that they are. So there's a reason why they're on here all of a sudden. Where the other ones that are normally on here, they're because they're normally volatile, and day traders and swing traders normally like to trade them. Plus, they have a lot of volume, which helps maintain value. That way, they're not suffering from as much time depreciation or time decay as most other stock options. And so, looking down the list, there are certain stocks we can see that are not normally on here, like Carnival. That was not normally on here, but they were affected by their earnings last week, so that why it created some abnormal volume activity. Same thing with Citigroup. Pfizer. I don't think Pfizer, which did not have, I don't think they had the financial earnings last year, but they're not normally on this list. And for some reason, all of a sudden they're on this list, and there's no volatility. But however, out of this amount of options activity, we have a 72% call ratio. Now, JP Morgan and Chase Company, same thing. They're not normally on this list. The ticker is JPM, but all of a sudden they're on this list with no volatility. But we have almost an 85% call ratio. That means that this stock could potentially start beginning to fly under the radar with some kind of activity. And maybe it's because of the earnings season is now being reset, and they're about to have their earnings soon, and now investors may be getting ready to bet that they're going to beat their earnings, or at least maybe they're going to ride the wave up until earnings, and they'll sell before the news comes out, because again, buy on rumor, sell on news. And so this could be that rumor, because a lot of times people are like, well, what does the rumor mean? Well, the rumor could be all kinds of, it's not just like the word of mouth. It could be articles that we read, maybe a Facebook post, or it could just be unusual activity, unusual buying activity. That could just give us that clue, hey, something's going on here, and that's the rumor. That is the rumor. Something's going on here that it wasn't ever doing before, and now all of a sudden it is. So let's take a look at JP Morgan on the graphs and charts. I have no idea what it looks like, but let's just take a look. JP Morgan. And so they're priced way up there. Look at that. That is just, but let's take a look at something here really quick, just kind of where they're at on the yearly graph. So they are priced really, really high. And so that's where I'm starting to think. I think maybe investors are starting to buy. They're going to ride that wave up until they get to earnings. They're going to sell because this thing's already priced in, and it's getting ready to price it in probably even more. But we definitely do not want to hold through earnings, because even if they beat their earnings, the stock's going to go down, and people are going to be like, well, how come it's going down? It has good news. Well, because it priced itself in, and investors are they're getting ready. So we're seeing a lot of calls activity, and that's why this is our radar. It provides a lot more information and data than your normal screener and scanner does. And so now we can always look at the most active individual calls and puts if we click on the option volume leaders. So this will provide the most active individual calls and puts, but when we're looking at it on a Friday, Saturday, Sunday, we want to make sure we're avoiding anything that has just expired. And so we can look at either the expiration date or the DTE, which is basically the number of days until that option expires. And so if we avoid that, that means that the most active option that's still current is Snapchat. Snapchat, which is currently at $11.48 a share, we have a $15 call. And again, this is great information whether you're an option trader or if you're just buying shares. But I highly encourage you to utilize this for your advantage and your financial gains if you aren't already. Now, this call strike price, which is set to expire in 45 days from now, or sometime mid-May, which had an open interest of 92,000, and now it has a volume of 77,000. So two things are either going to happen tomorrow morning. The volume, so the open interest, which is basically the total number of open contracts from the previous day that have not been traded, but not that have been traded but not yet liquidated via offsetting trades. That means that the previous days people bought and they're holding. Now the volume is always the current day's buying and selling activity. So with 77,000, we don't know if this is more buying activity or is it selling activity because it's less than the open interest. Now, if it was more than the open interest, that basically tells us it is just pure buying activity. But if it's less than, it could be selling activity, but we don't know. But until we get into the next trading day, if this merges with each other, then we know it was definitely buying activity, and this open interest is going to accumulate more and more interest because people are betting that Snapchat is going to go up. So let's take a look at Snapchat on the graphs and charts and kind of see where it is. Now Snapchat, which is usually very, very volatile during the its earnings reports, which it just had, I think, earnings not too long ago, and it had plunged, but $11. Or it can go up or down. Not that long ago, it was just under $8 last October 2022. But it's over time we're seeing I think higher lows and new highs in the last couple of years. But Snapchat is kind of a dying company. I don't really see very many people using it nowadays, but if they ban TikTok, this could easily help Snapchat and many other social media platforms. And so and that could be something that investors could be expecting, because that is something that is in the works. We saw how the United States government banned TikTok from the government employees, and it's all in the works to get banned altogether here in the United States. They keep giving China time to just sell it to us, but China doesn't want to sell it, and I don't think they're going to either. And so so we could just be in this middle of this argument for however long. But if it does happen, though, like I said, this could easily help out the Snap stock. Now, even if you buy Snapchat as a share at $11.50, and if it gets to $15, that is a substantial gain, like 30% gain just from holding a share within a very short period of time. And so, but going into Monday, we'll have to kind of see if the volume of Snapchat has merged itself with the open interest, or did it deduct it from the open interest. If it deducted it from the open interest, that means people are selling and they're abandoning it because Snapchat is most likely going to go down. So we'll have to see what it does after the market opens on Monday morning. The next most active individual stock option is Apple, which Apple currently is at $171.48, but we have a $172.50 call strike price that expires later on this week on Friday, April 5th. Though the open interest was a pretty small amount, right around 8,400, but we have a massive amount of buying activity on that one, and a $175 call strike price for Apple with the same expiration date and a lot of volume and a good amount of open interest are basically telling us that investors are bullish going into the next trading day. And this information is also accessible while the market is open. So this stuff updates every 15 minutes. So it's important that we look at this at least the last 15 minutes before the market closes. That way we know what people are doing. Where is the money going so we can follow it? The next one is the PTEN. I'm not exactly sure what that is. Let's take a look. Pattern Sun, probably utility energy. So it's an energy stock, which is probably pretty good. Looks like they were down last Friday, almost 1%. But we are going into this earnings segment where technology stocks are going to go down, energy stocks are going to go up. And so just be prepared if you are a long-term, short-term investor to make sure you are you're positioning your portfolio accordingly to the stock market and our economic cycle. So for PTEN, we have a $10 put. So people are, looks like they're betting against this particular stock. With an expiration date of May 17th, with open interest of really nothing, 755, that's nothing. Compared to the volume of 41,000, this is pure buying activity. And so people are betting against that there's some kind of issue going on with P10, or maybe they're priced high. Let's take a look here. We never know until we take a closer look here. And so it looks like they are they're definitely up there, but they could go either way. They could go up or down. But for now, investors are betting against the stock, betting that they're going to go down for the next few months. Then we have several Tesla. We have several Tesla calls, which is very bullish. But then we have a Tesla put, a little bearish, but it's always good to have a little insurance play in there. So when you're straddling both calls and puts, you can offset your ratio. So if you want to go maybe 60% calls, maybe 40% puts, because maybe you're more certain that the stock market is going to go more in one way over the other. You just don't want to offset that ratio too much, like 80% calls, 20% puts, because if you're wrong, having 20% puts isn't enough to recover the loss of your 80% calls. You were just too optimistic. And you don't want to do that. You don't want to use hope as a strategy. You want to think more analytical, more and strategic when it comes to this, because the stock market is like a battlefield. This is warfare, and you cannot mess around. You have to treat every dollar as if it was $1 million, because one day it might be, and so you have to think that way, because in order for you to be comfortable trading large amount of money, you just have to. Otherwise, you're if you get to that point, you're going to freak out, and you don't want to do that, because scared money don't make money. So Tesla looking good there. We have a Disney call. So Disney right now is $122 a share. We have $130 call strike price that expires in May 17th. Now we're entering the spring season. We're entering and soon we'll be entering the summer season. Disneyland always does very, very well during these seasons. It's spring break now, and it's a lot of people are going to Disneyland. They're traveling. They're doing a lot of vacations, and so plus Disney has a streaming service. Just like any of these streaming services, they always increase their monthly subscriptions, their premiums. And so if you have a subscription service and you have millions and millions of subscribers, and even if you increase your monthly subscription, $1. That is millions and millions and millions of dollars that company is gaining on a monthly basis. And so that just helps add to more profit and revenue for the company that will reflect its next financial earnings. And we can see that with Disney, with this particular call strike price, they had 36,000 in volume, and where before they only had 6,000 in open interest. So this is going to help accumulate that interest. And so people are betting that Disney is going to go up. And just for kicks and giggles, let's just take a look at its graphs and charts to kind of see where it's at. And this is hold on here. I think it looks pretty good. We'll take a look. It's 5-year, but we can see where Disney kind of bottomed out right around $79 a share back in October 2023. Very, very low, but we can see that it's been on an uptrend since then. And we're seeing a lot of green, a lot of buying, because Disney has so much more to go. I mean, it's been beat up. I mean, it was $200 a share. Where now, it's $120. It's got so much more, and so we're seeing that. We're seeing that people are betting. They're riding that wave up until further notice, until it's time to sell. So that looks good there. Then we have Google, which this is a kind of a short-term thing that expires this Friday, April 5th. Google's just under $151 a share, but we have a $155 call strike price with a lot of volume there. So looking bullish there. Then we have JP Morgan. We talked a little bit about JP Morgan, but it's on this list with a $210 call strike price that expires in June 21st of this year. Open interest was very little, right around 3,000, but we have a very large amount of 35,000 in fresh volume activity. So looks good there, but again, like I said, that one's priced already high up there, so we want to kind of ride the wave until probably right around financial earnings, and then we get out and then just let it drop. We can always watch and wait for its bottom. We can always get back in. So it's a good plan. Again, we always want to plan our trade so we can trade our plan, because if we fail to plan, we're planning to fail. Amazon looks great. We got a call there. There's another JP Morgan, another call. So again, this is a lot of good bullish activity leading into this week. So when we're on this page, it always defaults to a volume, but now we wanted to sort it out by open interest. So we want to click on that, sort it all by open interest, refresh the page, so that way we can sort the entire system by the open interest. So now we can see Nikola, which the previous meeting, I think it wasn't number one. It was somewhere in the middle, upper middle area, but now it is number one, most highest open interest. So something's going on with Nikola. Now Nikola was under $1, not that long ago. Now it's over $1, which now tells us it is in compliance with the stock market rules and regulations. And I don't know if you knew this or not, but if you have a stock that is under $1, and you're the company, you are in violation of the stock market rules and regulations, because part of their rules is for you to maintain a stock value of over $1. If you're under $1, you have some time to give yourself to figure it out, to get it up there. If you ran out of time, you can always file for an extension. Let the Wall Street say, hey, I need more time. They'll pay for it. They file an extension. You only have so many of those, and then you'll have to go to what's called a reverse split, which then you merge several shares into one, so that way you can increase your value. And all it does is just buy you time. And again, you have so many of those until those are gone, and then once you have exhausted all of these chances, then you have then the stock gets delisted and it goes into like an OTC stock market, which is like stocks that have been rejected. Those are like the it's like a detention center or something. They're just, they're bad stocks that just they weren't able to stay afloat. And so Nikola was just always on the verge of drowning, but it's we could easily see that it's going to recover, and investors are betting that it's time. And so we see a $2 call strike price, where right now it's $1. And even if you buy this as a share, it gets you $2. You just doubled your gains. And then there's another one here that is now trickling up the list. Well, we have a $1 call, so that one's already in the money. But a much shorter expiration date that expires in July. But the $2 strike price expires next year in January. So just by holding that, and most likely if it gets to $2, it can easily get to $3, it can get to $5, $10, just like that. We've seen it. We've seen it with NEO and many other stocks. Now, there's another Nikola right here that is two of them. We have a $1.50, and now we have a new $3 call strike price. There's something going on here, you guys, and we cannot allow this to slip under the radar. Now, by utilizing this technique, we can always find stocks that are ready to surge like crazy. I did it with GameStop. When GameStop was, $2, $3, $4, $5 a share, we started seeing unusual activity, and then all of a sudden we see GameStop just surge to $10, $20, $50, $100, $400, and then until it got intercepted. But this is where we can find these stocks before that happens. And we're starting to see that with Nikola. Now, Nikola had a rough history. Now, Nikola was trying to become an electric vehicle manufacturer for semi-trucks, but also, consumer trucks like the Ford Ranger or the Toyota Tacoma. They built this really cool looking electric vehicle, but they started to put the cart before the horse. They were lying to investors, and they were lying to our government, and other people, and that they had something before they did. And so they were trying to manipulate their stock for their financial gains, and so they got in a lot of trouble, a lot of lawsuits, but they held on, and time has moved on to the point where, it to me this looks like it's time. So we cannot let this slip through our fingers. We have to make sure that this is on our watch list, and if not, start investing into it because other people are doing it too. There is a massive amount of open interest. When you accumulate all this open interest from these 4 Nikola contracts, I mean, we're probably almost 500,000 in open interest. That's a lot. That is probably the most I think I may have ever seen. And so, but that's huge. So next one is PayPal. PayPal, which, PayPal's been around for a long time. It's been around since the 90s. I still use it. PayPal, which was part of Elon Musk's company, and then he sold that to eBay, and that's what he used part of that money to get into. Well, he bought Tesla from their founders, and just started to build that up, and then he started buying more like SpaceX and other things and whatnot, and establishing other companies and stuff. But but since then, PayPal has been kind of left behind, while other companies like Square and other companies were innovated. Thinking outside the box and coming out with new things and whatnot, where PayPal, they built their company very, very large, and then they just didn't do anything. And so now recently they have a new CEO. Last month, I think it was last month, we had the PayPal like an innovation meeting from the new CEO. He's a young guy, and he even explained, hey, I know PayPal hasn't really done anything. We're changing that. We're going to be innovative. This is some of the things that we have doing in the pipeline. If you haven't seen that video, definitely go on YouTube, type in PayPal innovating meeting. You should find the video of the CEO will talk about, and that was pretty. That was amazing. That was great to see. And at that time, PayPal was right around $60 a share. Now we're at 67, but even before that meeting, we started seeing these unusual call strike prices. We have a $140 call strike price that expires next year in January. So again, if you bought this as a share, it gets to $140. You just made over 100% gain from holding the share. Now, if you're holding the contract, you could potentially gain 1,000% if this goes accordingly to plan. But as a share, it's always going to be a safe bet that you're also holding on to an appreciating asset, but you're also part owner of the company because you're a shareholder. Now, Amazon, we have an Amazon here. Now, I don't normally see Amazon on the highest open interest list, but here it is. It's third place. Now, Amazon, which we have a $180 call. Not a call. The price for the share is $180, but we have a $160 call strike price, which is way in the money. Now, this strike price expires in June 21st, so approximately 84 days from now. This is a very, very expensive contract, which to me tells me that we have some millionaires that are buying this, because when it comes to stock options, you don't want very many contracts, because if you have hundreds of contracts and you're buying or selling, they execute in little spurts. And if they're not fully executed, because the prices are continually to change every second, and so if they change so they're no longer in your favor, now your order has been partially executed. Then you have to go back in there, you gotta modify your order, you gotta replace it until everything executes. And you can eliminate those spurts by buying more expensive contracts. That way you're buying less contracts and for more money. And so that's where I'm seeing that this has to do with extremely wealthy millionaires, if not billionaires, are buying or maybe they're selling. Because there's a lot of open interest. We'll have to see if this is accumulating or if it's deducting it off the open interest from the volume. So next is the SoFi, which we talked about in previous meetings. They're currently at $7.30 a share, but we have a $15 call strike price. So another good one to add to our watch list, because investors are betting that the stock is going to go up. It's been on this list week after week, and the open interest is accumulating on top of that. So great one to hold, whether it's a share or if you're buying contracts, because we're also noticing the price, the stock is going up. Then we have a Lucid, or LCID. For the ticker is currently at $2.85, but we have a $3 put strike price. Now, Lucid to me is like a Mercedes of a Tesla. These cars are very expensive, but they're very luxurious. But they also have a 500-mile range capacity, electric range, and so that's huge. Though, again, as we talked a little bit about EVs earlier in this meeting regarding oil prices, and oil prices were down pretty substantially, up until recently, where gas and oil prices pretty much went up 10-15% very, very quickly. And when that happens, all of a sudden EV sales go up, and so this is potentially, maybe people are selling their puts. We'll have to kind of wait to see kind of what happens. I don't see any calls yet, but or maybe they're buying and accumulating. Maybe Lucid's just really struggling, because when it comes to really like an EV or any other vehicle for that matter of fact, people like having a dealership nearby in case there's any computer glitches, any work that needs to be done. They can take it to their local dealership. They don't want to have to travel hours and hours away for a company like Lucid or Rivian. That could be way too far to have it serviced at those places. And so that's why it's better to go with companies like Ford Motor Company or other companies that have been already well established. There's another SoFi $10 call. There's more Nikola here. Ford Motor Company. It looks like a lot of puts on Ford, but it could be selling activity. We'll have to kind of see what the open interest does. Ford, which also I think just announced a couple days ago, they're laying off some of their factory workers. And so they're giving them some choices. You guys can either retire earlier, or you're just going to be laid off. I think it's for the Ford F-150 Lightning factories. So that's just going to help contribute to revenue. Because sometimes I know that may sound like bad news, laying off employees or whatever. But we got to remember, employees are a company's number one expense. And if they can reduce that. That means they reduce their expense. And so that way, what revenue that they do make becomes more profitable. So that's where bad news is good news. And so Ford Motor Company can easily later on down the road show that they are more profitable with what revenue that they have. And so now keep in mind, not that long ago, well, before Russia invaded Ukraine, Ford Motor Company touched $25 a share because what they started getting more into this EV and reveals and doing things they haven't done before. But Ford Motor Company can get to $25 a share. It can easily get right back there again. And keep in mind, they're building I think a couple new mega factories and a battery factory around the United States. So if you build it, they will come. And it will, and we've seen what it does to their share price when Tesla builds a new gigafactory. And so this is going to it's going to be very interesting because, like I said, with Ford laying off factory workers, but plus they're building factories. It's just, but there are still deadlines by 2030 and 2035 where certain states are required to go all electric. Like Hawaii implemented a deadline by 2035. All brand new vehicles sold in that state are required to be electric. The governor of California copied them, implemented the same deadline. My state of Washington wanted to beat them first and implement a deadline by 2030. So we're going to see a domino effect of more and more states implementing deadlines by certain time frame. All brand new vehicles sold in those states are required to be electric. And so this is only going to help these automotive manufacturer stocks like Ford Motor Company, Nikola, and Tesla, and so on. So then we have Snapchat, which we talked about already. Very good amount of open interest. And then we have NIO, which is currently at $4.50 a share, but we have a $10 call strike price for NIO. Now, we're getting closer to our election, and so the reason why NIO went from $60 to $5 a share is because we have a president, the United States president, that cut China off from the United States American semiconductors. NIO needs NVIDIA semiconductors for the car to fully function properly the way that it was originally designed. Well, they cut China off and their manufacturers from using American semiconductor chips. So now China has to rely on their own, low-powered, obsolete microchips, and they have to add more in these things for the vehicle to function properly. And so it's more expensive, and it's just not as efficient. And so, but if we get Joe Biden out of office, and we get a different president, no matter whoever that it is, and if they change some of these, these relationships with these companies, we could easily share our semiconductors with China again. And if we do, that is great, phenomenal news for NIO. NIO will easily get back to $10, $20, $30, $40, $50 a share. and so on. And so, but for now, it all to be determined. But NEO may, from what this looks like here, investors are basically betting that NEO has found its bottom, and they're getting ready to start buying shares. They're getting ready to buy calls, because we have a $10 call there, and we have a $5 put right here. So that one's all in the money. But it's an insurance play, just in case if NEO tends to go down more, because we still have a little bit more ways to go for the election. The election is October, November. So I mean, we still have we have a long time to go, but we know that investors and traders always like to start investing prematurely. They want to get in early. They want to be the first ones to buy the bottom. And so just make sure NEO is on your watch list. So then we have Bank of America. So Bank of America is at $37.92 a share. We have a $30 put strike price. So, and we talked a little bit about interest rates, throughout our meeting, and we're starting to kind of get that feeling where our government may not lower interest rates at all. And so, when you look at like automobiles and new vehicle prices and their interest rates, we can find manufacturers that are offering 1.9%, 2.9% for 60 months, 72 months, 84 months, no payments for 90 days, this and that. The manufacturers of the automotive industry have much more attractive interest rates than national banks and your local credit unions that are advertising rates of 5.9, 6.9, as low as 7.9 for an 800 credit score. This is going to hurt banks like Bank of America and many other credit unions. It already is. If you talk to any of your banks, they'll tell you. And so we're seeing that investors are choosing Bank of America to bet against. And so, but this put strike price expires next January of 2025, or approximately 294 days from now, with a growing amount of open interest. Because like I said, Bank of America was not on this list. I think the other week it was on the bottom, and it's starting to trickle up because it's accumulating. People are betting against banks. So, but once we get closer to that time, that'll probably be the time where we need to buy the shares of the banks. Once Bank of America gets to $30, because then it'll bounce back up to $40 over another year or two. So that's a good amount of gain, 30%. And I think Bank of America pays dividends. So not only will you be holding an appreciating asset, but they're going to pay you every 3 months just for holding their stock. But we want to make sure that we're buying it at its bottom, and that's most likely kind of where that time frame that bottom's going to be. Let's take a look. We have MPW. I'm not familiar with that one, but we do have $5 calls. Not too far from that. Let's see here. Page had to refresh here. NEO did that. Apple. So we have a high open interest on Apple. That's always good. We have a $190 call strike price that expires mid-May. Then we have Robinhood, so which I've talked a lot about in our group before, and I'll try to put subliminal messages in some of the posts when it comes to that, and I'll show you, for example. So Robinhood, which is at $20 a share now, it wasn't that long ago where it was like right around $10, $11 a share. And so let me see if I can find my post that I did. Here it is here. So January 19th of this year, I started to see, just like what I'm doing here, just showing you with these charts, the unusual activity. I see, so Robinhood, which was right around $11, and I'll show you using the graphs and charts here. So here's Robinhood. So January, let me change this up a little bit here. So January, which is right around this area here. So so this was about $10, $10 to $11 I'm starting to see that activity. We're starting to see where the MACD has been in the red for quite a while, and the moving averages are kind of ranging. They haven't yet crossed over, but the MACD is saying, hey, it's getting ready. All of a sudden, investors started buying, and all of a sudden, we started seeing that unusual activity. We started seeing where Robinhood was $11, and we started seeing an unusual $20 call strike price. Well, when I see that, I try to let you guys know. But for this year, I decided to use Elon Musk's little picture to really help get that word out. Now, of course, he's not saying it. It's me that's putting it on the piece of paper. He's just holding on to the piece of paper that I put there. But definitely is very interesting to kind of get the attention, because it definitely gets the word out. But I also put my description: unusual buying activity detected on Robinhood with a price target or strike of $20 by the end of 2024. Now it has reached that, and we're now seeing a because now that it has reached that strike price, we will always see a new strike price. Now we see a $25 call strike price. So I'm going to redo that. I'm going to redo that image, and I'll put 25 on there, because now it's going to be good until the end of this year. But most likely it's going to reach that much sooner. And the reason why Robinhood is probably doing what it's doing is because anytime when the market becomes very volatile, or the cryptocurrency becomes very volatile, especially when it's a bull market, people start referring their friends and family and colleagues, say, oh, you got to do this. I'm gaining. You got to do it too. Here's my referral link. Hey, join our group, blah, blah, blah. And so that just helps the company, the Robinhood app, and it becomes more profitable for the company, and just people start pumping it up. And so this is the new strike price for Robinhood, and it is accumulating. We'll just have to monitor it every day, as well as our throughout our weekly meetings. So very important. Hopefully you guys learned a lot from our meeting here. Anybody have any questions? Feel free to unmute your mic if you want, and then that way, if you have any questions, just let me know. All right, no questions. That's good. That means you guys are ready for this week. Well, thank you guys for joining our live stock market meeting this week. We'll do it again next Sunday. In the meantime, have a great Easter weekend, and let's start rocking and rolling tomorrow morning. Any questions, please don't hesitate to let me know, or us in the group or the chat room.